Hi, everyone. Thank you for joining us today on our webinar on the proposed Northern Ireland Windsor Framework Agreement. My name is Alex Wyatt from Simply VAT, and I'm happy to be hosting today with my colleague Louise. I just wanted to cover off a few housekeeping things before we get started. First off, this whole thing is going to be recorded, and you will get the recording sent out to you afterwards, so you can come back and digest everything a little bit further. Next, if you have any questions or you just want to say hello, just to the right, you will be able to use the chat box. You can say, answer any questions like I mentioned, and we will get back to them by the end of the presentation. Please note when we do answer those questions that the Windsor Framework Agreement is still being transposed into law. And so if we can't answer anything specific today, we will be able to get back to you afterwards. Next, you can feel free to subscribe to our YouTube channel here. We do pop in videos or webinars every once in a while to update you on anything that you might need to know. And finally, like I mentioned, if you have specific questions about your business that you want to get the details as these new legislations come into action, then please reach out to us directly. You can do so from the link in the description just below the video. So now to introduce the lady of the hour, I have my colleague, Louise Bousmart. Louise is our senior indirect tax researcher here at simplyvat.com. So first off, she'll be leading us through the current rules, what's changing with the Windsor Framework Agreement, and finally, we're going to be opening up the floor to questions. So handing over to you, Louise.
Thanks, Alex. Morning, everyone. Welcome to this webinar. So as Alex mentioned, we'll first be looking at the current rules under the Northern Ireland Protocol, and then we'll be looking at what may change in the future since the Windsor Framework was just agreed between the UK and the EU. So we'll do our best to cover as much as possible. There's a lot to cover when it comes to the protocol on Ireland and Northern Ireland, when it comes to VAT in general, but I hope this is going to be insightful, and then you can take away lots of information from the next hour that we've got together. So to start with, I wanted to remind everyone of what is actually the protocol on Ireland and Northern Ireland. So it's a solution that was agreed upon by the UK and the EU to keep the border between Ireland and Northern Ireland open when it comes to trade, notably. This was put in place in January 2021 in the context of Brexit. It was signed as part of the Brexit withdrawal agreement between the UK and the EU. And as you may know, since its implementation, a lot of issues when it comes to movement of goods have arisen, especially for Northern Irish consumers, Northern Irish businesses, GB businesses trading in Northern Ireland, moving goods, a lot of paperwork, a lot of burdensome requirements, which have made life of many traders difficult since Brexit. The protocol aims to keep Northern Ireland inside both the EU single market, but also the UK VAT customs regime for the trade of goods. So in this webinar, we're only going to be covering goods, not services. And the protocol implies that there are checks and customs controls on goods arriving in Northern Ireland from GB at the moment. So as you may have heard in the news, there's a new agreement that was recently signed between the EU and the UK. This is referred to as the Windsor Framework, and it is designed to make trade between Northern Ireland and GB easier. It involves a lot of changes to EU rules, a lot of changes to the protocol, and it will give the UK more freedom when it comes to VAT. For example, more freedom to set tax rates and more changes that we'll see together. But today we're only going to be covering trade, but you must know that there's a lot of other changes that are part of the new framework. So to start with, we'll look at the current rules when it comes to trading goods in and out on Northern Ireland. So the first thing to really bear in mind is everything we're going to be discussed today when it comes to customs control, to checks required when moving goods, etc., we expect that further guidance will be published, and the rules that we are discussing today continue to apply until further guidance is published from the UK government and the EU as well. The first thing to really bear in mind when it comes to Northern Ireland is that essentially EU VAT rules apply when it comes to Northern Ireland in respect of goods, and again, just goods, not services. So you might even think that Northern Ireland in a way hasn't left the EU. It's still part of the EU single market for goods. This means that VAT obligations, VAT reporting, VAT requirements continue to apply to Northern Ireland, and these are the EU VAT rules. So Northern Ireland has been subject to a dual VAT system since Brexit, the UK for services and the EU VAT system when it comes to goods. So for example, EC sales lists continue to apply, Intrastat requirements continue to apply, and movement of goods between Northern Ireland and the EU is still subject to EU VAT simplifications. Movement of goods between Northern Ireland and the EU are considered intra-community movements of goods. So it's almost like, to simplify, to put it in a nutshell, that Northern Ireland hasn't left the EU for VAT purposes when it comes to goods. First thing to remember. This has new
About the break here in our internet. We hopefully are back now. Sorry about that, Louise. You can continue.
I think I'm back. Okay. Yes, that's working. So apologies, everyone. What I was saying is that the first thing to remember is that EU VAT simplifications continue to apply to Northern Ireland. There's a new XI prefix that was introduced since Brexit. This refers to Northern Ireland. So if you are trading between Northern Ireland and the EU, you might already have an XI VAT number or an XI ERI number if you didn't have an ERI number in the EU before. So if you're having trade between Northern Ireland and the EU, you're possibly already using that prefix. We've just said that the EU VAT rules are applicable in Northern Ireland when it comes to goods, and that involves the new EU VAT e-commerce rules, which are also applicable to Northern Ireland. So if you're familiar with VAT rules already, you might know that in July 2021, a new package of e-commerce VAT rules were introduced in the EU, and they're making lives of many traders easier. So that includes the VAT OSS, the one-stop shop. And the system applies to Northern Ireland as well. It was introduced in the UK. So if you are shipping goods from Northern Ireland to the EU at the moment, maybe you're using the VAT OSS already. You can register in the UK if you are holding stock in Northern Ireland and making your distance sales to EU consumers from Northern Ireland to the rest of the EU. This is possible in the UK as well. Other e-commerce VAT rules apply as well. For example, the new threshold, which is 10,000 euros, also applies when it comes to goods sold from Northern Ireland to the EU and from EU to Northern Ireland. And then the VAT rules for imported goods into Northern Ireland also follow European rules. So it means that any sales of goods from outside the EU into Northern Ireland are not considered as distance sales for VAT purposes, but they are considered as import. And the low value consignment relief for imported distance sales was also removed as part of the e-commerce VAT package, so same as the EU. And that means that since July 2021, there is VAT due on consignment of goods valued up to £15 or less. So let's have a look at how, if you're trading or if you want to start trading in Northern Ireland, maybe you've heard that rules are going to get easier, less checks. We've heard about the Northern Irish Protocol in the news quite a lot recently, so perhaps you're thinking about starting to trade, to move goods into Northern Ireland again. So let's see how that would apply for goods imported into Northern Ireland from outside the UK or outside the EU. So any sales of goods from outside the EU into Northern Ireland, as I said, they're not considered distant sales. However, they will be considered as imported distant sales. This means that VAT is due, we've just said, for any goods imported into Northern Ireland, for goods imported from outside of the UK, but also in Northern Ireland for goods imported from outside the EU and the UK as well. Consignments of goods with a value of £135 or less that are outside the UK and the EU and sold through an online marketplace to consumers in Northern Ireland would also have import VAT charge. We'll come back to this in a few slides. There's a lot to say about marketplaces as well, and I know that's a topic that's really really important to many of our sellers in our audience. How does it work if you sell on a marketplace and if you're selling in Northern Ireland? We've just said that the VAT OSS is applicable in Northern Ireland. So if you have your inventory in Northern Ireland and you're thinking of making your distant sales to European consumers from there, then you can use the VAT OSS. What about the import one-stop shop? So this is also a system that was introduced as part of the e-commerce VAT package in July 2021. UK traders can use it, so you can register for it, but you would need an intermediary for using it as it stands. This is a service that we offer at simplyvat.com. We offer that service for traders. We've been acting as IOSS intermediaries since the beginning of the scheme. So if you're interested, if you have any questions, do feel free to reach out. The UK was due to introduce an IOSS system at some point. However, there's still no news on this as it stands. So as a GB seller, you would need to register in the EU if you wanted to use the IOSS, but again, with an intermediary based in the EU. It's an optional scheme. You don't have to use the IOSS if you're importing goods to consumers in the EU. So it's a simplification that is available there if you need to, but it's completely optional. If a GB business chooses to use the IOSS, any B2C sales of goods in consignment not exceeding £135 to customers in Northern Ireland should be reported in your IOSS return. So if you are registered for VAT in the UK and you're making sales to Northern Irish customers, under the new e-commerce VAT rules, you will have to account for the VAT in your IOSS return, not in your GB VAT return. So that's important. This is a question that we've had quite a lot. If you choose to use the EU IOSS scheme, do make sure that you inform HMRC about this. They want to know if you are importing goods into Northern Ireland using the IOSS. So it's also something that we can help you with, but HMRC wants to be notified if a GB trader uses the EU IOSS identification number when moving goods and selling goods to Northern Ireland. Something to bear in mind as well is that if you are a GB business and you're using the IOSS in the EU, but you're still below the VAT registration threshold in the UK, you don't have to charge VAT on your B2C sales to Northern Irish customers. So let's have a look and talk a little bit more about this consignment. So first of all, what's something to also bear in mind is that the value of your consignment is essentially the price that your customers pay for when they purchase the good from you, so at the checkout. And it's the intrinsic value of the goods. So it doesn't include shipping, insurance, wrapping, any other additional cost, unless these additional costs are already included in the value, in the price that your customers pay for when they purchase the goods from you. So really important when it comes to monitoring the value of the parcels, of the consignments that you ship out. So for goods sent to Northern Ireland in consignment where the value is up to £135 or less, we know that import VAT is always due, and it's due also in Northern Ireland when the goods come from outside the EU, outside the UK. If you're not registered on IOSS, you will have to account for this in your GB VAT return. If you are registered on IOSS, put this in your IOSS VAT return. What about B2B transaction? So if you're trading from GB to Northern Ireland and it's a low value good, the liability for the import VAT lies with the business customer. This is whether you're selling directly on your website, directly to your customer, or even if you're selling on a marketplace, that applies. In this scenario, postponed VAT accounting becomes compulsory, and your business customer will have to ensure that they select that option to use postponed VAT accounting when they lodge their customs declaration. That UK business customer will have to account for the import VAT on their VAT return, but they will be and then they will be obviously able to recover that subject to normal VAT rules and using the postponed VAT accounting, obviously. What about B2C transaction? So whether you're selling directly to customers or if you're selling on a marketplace, the seller is responsible for the import VAT, and this is irrespective of where you are based. So you will have to charge VAT at the point of sale. And again, so important to really monitor that value when you're selling goods to customers in Northern Ireland and in the EU in general when the goods are coming from outside the EU, outside Northern Ireland. So I would say that whenever you're shipping goods, do really think about their value and do think about where the goods are located, obviously at the point of sale, because this is something that can impact the VAT treatment. So we've looked at low value goods. Let's take a look at what happens if you import goods in consignments, but the value goes over £150. So if it's a B2B transaction, the businesses would be able to declare and recover the import VAT on the same VAT return rather than having to pay it upfront and recover it later. This is subject to normal VAT recovery rules, and it's optional, but you can use postponed VAT accounting there. You'll just have to select it again in your customs declaration, indicate that you want to use postponed VAT accounting. For B2B transactions, there hasn't been any changes since Brexit there. Import VAT continues to be payable by the recipient under the same processes as it was as today, as before Brexit. And this is obviously if you're selling on a DDB basis. So again, important to think about the Incoterms that you're using. And if you're not sure, do speak to an expert, do speak to customs experts, to your freight forwarders, etc. They'll be able to help you there as well, because the Incoterm can also, of course, impact the VAT treatment. So in a nutshell, VAT is due on goods being moved between GB and Northern Ireland. It continues to be accounted for as it was before Brexit. The seller of the goods continues to charge their customer VAT, and this should be displayed on their invoices. VAT is charged and it is accounted for as output VAT on the GB VAT return in the same box as before Brexit. So there hasn't been any changes. There hasn't been any changes to the GB VAT return. I haven't mentioned that, but since Brexit and with the new protocol, there hasn't actually been changes. You don't need to get a new VAT registration. You don't need to submit a different VAT return. It's the same. However, you might need to get Northern Irish registration number, and we've just said that at the beginning of the webinar. It would be the same GB number that you currently have, but you have to put the prefix XI. So really important. Obviously don't do this just by yourself. You'll have to notify HMRC, but you don't need to go through a whole different process of registering again your business in Northern Ireland. It'll be the same number with a different prefix, but do inform HMRC if you're doing so. And then if a business customer receives an invoice from a seller showing that VAT has been charged, then again, this can be used to reclaim the VAT as input VAT subject to normal rules. There are some exceptions that can apply. For example, if goods are being moved under a special custom procedure, etc., or maybe the goods are being sold on a marketplace, there are exceptions that we need to look into. So if you're unsure, do reach out, do ask questions. Don't feel like you have to figure all of this by yourself. We have a lot of clients who contact us because they want to move goods from GB to Northern Ireland. This can actually be a good way to trade in the EU, a good introduction to trading in the EU, and that would consist into two different distinct supplies. So if you're a GB business and you decide to move goods into Northern Ireland because you want to make decent sales from Northern Ireland, and you feel like, okay, maybe that's easier, it's an easier entry into the European, the EU market, that would consist into two different movements of goods. So first, you would be making a movement of your own goods from GB to Northern Ireland. VAT would be due there. You would need to account for the VAT on that movement. This should be included as output VAT on your VAT return, and you can reclaim that, obviously, if this is part of your taxable activities, then you can reclaim the VAT that you incur when moving the goods. Once your goods are in Northern Ireland, then they are cleared through customs. They are in free circulation in the European single market. So they would then follow European rules. For example, if you're making decent sales, you would have to follow European VAT rules for decent sales applicable in the EU. You could use the one-stop shop, for example. That's one option. We have a lot of clients who choose to do so. You could move stock around the EU. You could choose to register locally in every single European member state where you sell goods to, if that's your choice. Or use the one-stop shop. So it's something to think about. So I wanted to wrap up this first part with some current requirements for GB businesses when it comes to trading under the Northern Irish Protocol. So if you're moving goods into the EU, you need to make sure that you've got an ERI number. Maybe you've already had one. Perhaps before Brexit, you already had an EU ERI number. And if that's the case, then you shouldn't need an XI ERI number, because you can only have one ERI number in the EU. So if you already had an ERI number, then you don't need a Northern Irish ERI number. But you do need that number before moving goods from GB to Northern Ireland or to the EU. There is a scheme that is available for traders, and I would highly recommend to sign up for it if you haven't yet. And if you are planning to trade, to move goods from GB to Northern Ireland, again, you've heard that in the future, trade will be more easily, seamless, and less burdensome. So that could be interested to sign up to that scheme already. And you can get free help from this scheme with your customs declaration. You can apply for a duty deferment account if you're planning to import regularly. That could be interesting as well. As it stands, you need to know your commodity codes when you're moving goods from GB to Northern Ireland. We'll come back to this later, but this is likely to change in the future. But as it stands, you do need to know your commodity codes. There are tools available on the government website if you're unsure. But yeah, you have to know that we have a lot of clients contacting us and they're not sure about their commodity codes, or they're asking, do I need to know that? This is information that as a business, you should know. Remember that as it stands, Northern Ireland follows European VAT rules when it comes to goods, not services. Services are subject to GB VAT rules, but for goods, you follow the same simplifications, the same schemes available in the EU. And then you have to identify with an XI VAT registration number, and you need to communicate this number when you're trading in the EU, so with your European business partners, etc. So we mentioned marketplaces earlier. If you're on this webinar, I'm guessing you're interested in VAT, or this is something that you need to be aware of. As a trader, you always need to be aware of your VAT obligations. So you may be aware that in July 2021, there's that new package of e-commerce rules that were introduced in the European Union. And these also involve a new deemed supplier provision for marketplaces. So this means that under certain circumstances, a marketplace, let's say Cdiscount, Amazon, eBay, there's plenty of marketplaces, plenty of choices to sell on. These marketplaces are deemed supplier for VAT under certain circumstances. So there's two scenarios when a marketplace will be deemed supplier and have to collect and to remit the VAT. The first one is when they facilitate the sale of consignments of goods with a value up to £135 sold to a Northern Irish customers. Or to a European customer. Here we're focusing on Northern Ireland, obviously, but these rules are applicable in the EU. And then they also become deemed supplier when they facilitate the sale of any valued goods or any consignment to Northern Irish customer when the goods are located in GB at the point of sale and that the business is a non-resident. So a little bit more about this. The marketplace, we've just said that they become responsible for accounting for VAT for B2C sales of goods of any value when the goods are sold by a seller established outside the UK. Northern Ireland is a little bit of you really need to know when we have clients contacting us, they're selling on a marketplace, they have their goods in GB or in Northern Ireland or outside of Northern Ireland. It's really important for us to really know where the goods are at the point of sale because it really changes the VAT liability, and also your status as a business will impact who is liable for the VAT or not. Does the marketplace take the liability or not, for example? So a marketplace would become responsible for accounting the VAT due on B2C sales of goods of any value when a seller is established outside of the UK in the following circumstances. The goods are located in GB and they are supplied to a Northern Irish customer, or the goods are located in Northern Ireland and they are supplied to a GB customer. This is because the UK also introduced similar e-commerce rules a couple of years ago. They also introduced new rules for low value goods sold to GB customers. And then the marketplace, when they become deemed supplier, they have to account for the VAT on their GB VAT return. So what happens when you're selling goods to European customers through a marketplace? Again, the marketplace becomes liable for the VAT on the goods located in the EU or in Northern Ireland when the seller is located outside of the EU and Northern Ireland. This is the European new package that says that an online marketplace is liable for the VAT on goods sold by non-EU businesses when the goods are already located in the EU. So again, this is why it's so important to know where your goods are located, what's their value, and where you're based as a trader, because it will change the VAT treatment. An online marketplace. So when we say OMP, we refer to online marketplace. If you ever look into government's guidance from HMRC, for example, they would refer to OMP, online marketplace. So an online marketplace also becomes liable for VAT when a GB seller makes sales of goods which are already in Northern Ireland at the point of sale and sold to European customer. Now, really important, something I would say to really highlight is that the marketplace liability does not apply to the sales of goods located in Northern Ireland and sold to Northern Irish customer. So if you're a GB business, you've got goods in Northern Ireland and you're selling them to Northern Irish businesses, not businesses. I'll start it again. If you're a GB business, you're moving your goods to Northern Ireland and you want to sell on a marketplace and you're making sales to Northern Irish customers, you have to collect the VAT. You stay liable for the VAT there. The marketplace does not become liable for the VAT due on those sales from Northern Ireland, staying in Northern Ireland to Northern Irish customers. So something really important here. A little bit more about this, but I really want to to highlight this point. So again, we've just said that the new marketplace liability, so marketplace having to register, having to collect VAT on behalf of a seller, it does not apply to GB businesses making sales of goods to Northern Irish customers. So something to really highlight. When this happens, if you are selling to Northern Irish customers as a GB business, you have to continue collecting the VAT and remitting the VAT. If you are registered for VAT in GB, So you're based in GB, you have a UK VAT registration, but you also decided to register for the IOSS. We've just said that import one-stop shop, that simplification available for businesses. And you make sales of low value to customers in Northern Ireland. Remember that you must pay that VAT in your IOSS return. Oh, is it? Okay, I really hope the internet is okay. We're having a little bit of issues. If there's anything that you're missing out, anything you're unsure, if the connection cuts, do feel free to reach out after the webinar. If anything is unclear, I really hope everyone can still follow. But do feel free to reach out if you're missing out. As Alex mentioned, we will be sending out a follow-up with some takeaways. So hopefully that will be insightful as well. But hopefully everyone can follow. I'm just going to start this one again. So I was just saying, I think that's a really important point. And one of the takeaways for you today is that if you're based in GB, you're using the IOSS and you're selling goods to customers in Northern Ireland, your goods are coming from GB, do remember that you have to, the goods are not necessarily, sorry, the goods are not coming from GB, the goods are coming from outside of the EU. Usually you would think that you could put this in your GB VAT return, but no, you have to put it in your IOSS return. And remember that you need to notify HMRC if you are using IOSS. So that's quite important as well. If you're a GB business and you're not registered for VAT in the UK, maybe that's because you're under the UK VAT registration threshold, but you're using the import one-stop shop. You also need to tell HMRC that you're registered for IOSS before you start moving your goods to Northern Ireland. And if you're a GB business, but you're not using the import one-stop shop, then the normal GB to Northern Ireland rules apply. And as a supplier, you have to account for the import VAT in your VAT return. If you're not registered, if you're under the UK VAT registration threshold, you're not required to charge VAT on the supplies that you make to customers in Northern Ireland. And if you're a GB business and you're not registered for IOSS, you can continue to use the existing VAT treatment for supplies of goods to Northern Ireland. So then, okay, we've talked about movements of goods. We've talked about sales from GB to Northern Ireland. We've talked about what happens when you import goods into Northern Ireland if you're using the IOSS. And sorry. Yes, okay. Am I still there? Yes, I'm so sorry. It's the internet now. Okay. So now let's talk about what happens when you're moving. So you've imported your goods into Northern Ireland. What happens next if you want to trade with the rest of the EU? So that's when, under the Protocol of Ireland and Northern Ireland, the movement of goods between Northern Ireland and the rest of the EU is still the same as it was before Brexit. So there's no customs declaration required. There's no customs checks between EU and the rest and Northern Ireland. No changes. You need to just follow EU VAT rules in this scenario. But do tell HMRC if you are using that prefix, that XI prefix for your intra-EU trade. So this was this first part of the webinar. Again, we've had a lot to cover, a lot to take on. I know it's a complex topic. I hope this was insightful. There's a lot to cover. My advice would be if you are currently trading, or if you are thinking of trading again towards Northern Ireland, moving goods, perhaps moving inventory, and then trading into the rest of the EU, because you know that simplifications are coming, and we will look at them in the second part of this webinar. Do sign up to that scheme that is available for businesses. Do reach out to experts. To ask around, ask experts, ask your customs freight forwarder, reach out to us if you're not sure about what applies to your business. I know there's a lot of different exceptions applicable. If you think that the IOSS or the one-stop shop may be a good scheme for you, then again, do reach out, ask questions, and you don't have to deal with all this on your own. But this was the first part. I hope that was a good insight into what the protocol implies as it stands.
Thanks, Louise. So we're just going to take a brief pause here. I have a few case study questions to ask Louise as we go into the next session. So just before we hop in there. So the first one here. I'm a GB seller and I sell on a marketplace to Northern Irish and EU customers. Do I need to collect the VAT?
Yes, absolutely. Yes, because we've just said that the marketplace liability does not apply. So there's two scenarios here. When it comes to your Northern Irish customers, we've just said that the marketplace liability does not apply in respect of GB businesses selling to Northern Irish customers. So you will have to continue accounting for the VAT on those sales. However, when it comes to your European customers, if you're shipping your goods from GB, you're selling on a marketplace, let's say Amazon, Cdiscount, to European customers, because you're a non-EU business, then the marketplace should be collecting VAT on those sales. So two different treatments here.
Thank you. Our second one. If I'm a VAT registered GB business registered for IOSS and selling to Northern Irish customers, do I need to account for the VAT collected on those sales in my IOSS return or my GB return?
This is a good question, and we get it a lot. In this case, if you are registered on the import one-stop shop, you have to account for the VAT on the import one-stop shop. So something to bear in mind when you're using the OSS or when you are using the import one-stop shop, you cannot pick and choose which sales to put through the scheme. If you are making sales eligible for the IOSS, you have to put them in the IOSS. Same with the OSS, for example. If you're on the OSS, you cannot decide, I'm going to account for the VAT on those sales on the OSS and then on those sales in my VAT return. No, you have to use them and put them through your IOSS return, not the GB return.
Perfect, thank you. And I have one more before we continue on to the Windsor Framework. I want to move inventory to Northern Ireland and dispatch my orders to the EU customers from there. What would be the best option for me?
So when you're moving your goods, let's say from GB to Northern Ireland, you will have customs processes, customs checks due when the goods are being moved. So that's the first movement of your goods that you will have to account for, separate supply. You'll have to account for this. The import VAT that you will incur, you can then reclaim it, you can get it back. And then for the goods dispatched from Northern Ireland to your European customers, then it could be interesting for you to potentially use the one-stop shop. So one-stop shop, you register in Northern Ireland on the GB scheme. So HMRC has opened a one-stop shop for that purpose. So you would have cleared your goods through customs. They're into the single market. They are located in Northern Ireland. Then maybe the one-stop shop could be good from then. You would register on the one-stop shop, and then you get your OSS number, and you make your sales on your website. You make your sales to European customers. And rather than thinking of having to register in every single member state where you've got customers, let's say France, Spain, Italy, instead of doing so, you could use the one-stop shop, and then you account for the VAT in a single VAT return. On a quarterly VAT return, you have a single VAT payment, and that's a big simplification that is there for you. So I would say that could be a good option if you're doing B2C sales, not B2B, B2C sales into the EU. So one thing to bear in mind is that the OSS, the IOSS, all the schemes that we've covered today, they don't apply to business sales. They only apply to business to consumer sales.
Thank you. Okay, so we're going to get back right into the Windsor Framework. Over to you.
So, Northern Ireland. Back to Northern Ireland. You have probably, this was discussed quite a lot recently. Actually, since Brexit, we've always heard quite a lot about Northern Ireland and the protocol. Unfortunately, this is because the protocol has proved to be in practice causing difficulties for businesses for trade between Northern Ireland and the rest of the UK, with supply chain being really disturbed, a lot of paperwork, a lot of burdensome processes and requirements that have made lives of Northern Irish consumers and businesses and GB businesses quite difficult. So this is when the Windsor Framework comes into place. This is a solution that was agreed recently by the EU and the UK. So that framework is designed to make trade between Northern Ireland and the rest of the UK easier and to facilitate trade and movements of goods in the internal UK market. It also addresses a, I quote, democratic deficit. We'll come back to this with the Stormont break. And it ensures that Northern Ireland will, moving forward, be subject to the same VAT and excise rules that are applicable in the rest of the UK. There's a number of changes. As I said at the beginning of the webinar, there's a lot of changes. I've got the document printed here. It's quite a few pages. There's a lot of changes when it comes to several topics, several issues. And some of the issues are VAT and customs. So there's a number of VAT changes expected to the protocol. I'm going to cover them. This is going to be quite high level. However, if you think that any of these would impact you, again, do feel free to reach out to us. So the first VAT changes that we expect to see is that the UK will have more freedom when it comes to applying reduced VAT rates within Northern Ireland. There's going to be a list of goods which is going to be drafted, and these are goods which are not at risk of entering the European Union, and therefore they will not be subject to European VAT rules. That list, which is going to be put together, will be valid for 5 years and then subject to review every 5 years, updated if necessary. Northern Ireland will benefit from the same VAT and alcohol taxes as the rest of the UK. You may be aware that reforms are coming this summer, from what I understand, to alcohol taxes. In the UK, Northern Ireland will benefit from this as well. Northern Irish businesses will not have to register under an upcoming reform that the EU is introducing for SMEs in 2025. And there's a new scheme that will be introduced for second-hand vehicles from the 1st of May 2023, so this year. So one of the aim of the Windsor Framework is to restore a smooth flow of goods within the UK internal market. So even though the movement of goods, the trade of goods between GB and Northern Ireland is tariff-free, there's still a lot of requirements. And if you are currently trading, if you're already trading, moving goods between GB and Northern Ireland, from GB to Northern Ireland, you probably know that there's a lot of checks applicable and requirements, additional requirements for certain goods, additional certificates required. So it's quite burdensome. And it's made, as we've said, life of businesses quite difficult. So a new concept is going to be introduced, and a new UK internal market system is going to be introduced as well for internal trade. We'll come back to this, but this is referred to as the Green Lane. Under that Green Lane and under the new UK internal market system, goods being sold in Northern Ireland will not be subject to unnecessary paperwork, unnecessary checks, and all these burdensome processes or duties. Instead, only certain commercial information should be required under the new changes. So in a nutshell, the biggest change that we think could impact our clients, impact our audience, and benefit them is that significant customs simplification. So really a lot of simplifications when it comes to customs procedures and custom checks. So you can expect a reduction of custom checks, as I've just said, with that new concept of green lane and red lane at ports when you're moving goods from GB to Northern Ireland. So what does it actually mean? It means that at Northern Irish ports, there will be a green lane for GB goods, which will be staying in Northern Ireland and they will be subject to reduced paperwork and reduced checks. So at the moment, if you're moving goods from GB to Northern Ireland, it's like you're importing goods in the EU. So we've just said it's subject to all the standard customs procedures. However, what is suggested in the Windsor Framework is that moving forward, rather than having to comply with that red tape, ordinary commercial information will be collected and will be shared between the UK and the EU, so much more simplified than the customs procedures. So that's for the green lane. There's also that concept of red lane for goods moving from GB into Northern Ireland, which are due to travel either to Ireland or to the rest of the EU, and these will continue to be subject to the strict customs processes. So these changes also apply to e-commerce parcels. So from what I understand, again, the online trade between GB and Northern Ireland has been quite disrupted since Brexit. Unfortunately, even though simplifications for VAT exist when it comes to clearing goods and customs declarations, etc., a lot of disruption and added cost were introduced, unfortunately, as part of Brexit. So under the protocol, parcels to Northern Irish consumers require those full customs procedures. However, from October 2024 and under that new Windsor Framework that we're discussing, B2C e-commerce movements of goods will have customs requirements scrapped and replaced that ordinary commercial information. For B2B movements of goods, they will follow the same internal market scheme that we've just mentioned, that new UK internal scheme. The trade-off flows will be monitored by commercial data rather than customs processes to remove that border between the Irish Sea and the UK for UK internal trade. So I think this is a really one of the takeaways as well for today, I would say, is to remember, or rather to get ready to prepare for the fact that when these changes come into place, rather than having to fill in, to comply with burdensome customs requirements when you're moving goods, when you're selling goods from GB to Northern Ireland, instead, commercial data will be collected, and that's what's going to be used to monitor the flow of goods between GB and Northern Ireland. I think that's a significant change, and that will hopefully improve the trade and the life of businesses when this change comes into place. So there's a new scheme that will be expanded. We've talked about the trader support scheme earlier. This is a scheme that you can use. You can sign up for it for free. It will help you with your customs declaration and obligations in Northern Ireland. There's a new scheme that will be expanded to more UK businesses, and they can benefit from simplifications as well. So do keep an eye on this. So it's called the Expanded Trusted Trader Scheme. If you're already registered in the UK on a trader scheme, you will be automatically enrolled to that new scheme. There was a few requirements, from what I understand. There was a few requirements to sign up to this trader scheme before. For example, you would have had to have premises in Northern Ireland to benefit from the scheme. But this scheme is going to be expanded. So even if you don't have a fixed establishment in Northern Ireland, I would recommend to look into it, to sign up for it already, because then you can be automatically enrolled when the new scheme is made available. And you can join it. If you're not signed up for it, you should be able to join the scheme easily, and it should be free as well. As I just said, the ordinary commercial data. So what do we mean by this? These are just the data from your sales invoice and from your transport contract. So what we expect is that this data will be communicated, and the UK authorities will then exchange this with the EU, and that's how the flows of goods, the trade of goods, and goods coming into the EU will be monitored under. So what's going to happen next? So we've just said, instead of these the previously applied customs checks, the authorized parcel operators will be sharing the data of the parcels of the goods. So same for e-commerce parcels, that applies as well. They will be sharing the commercial data and money, and that's how the goods entering the EU single market will be monitored. So I think that's something to really bear in mind. This new approach of real-time data sharing on e-commerce parcels will apply even if the goods that you're moving, that you're selling into Northern Ireland under the Windsor Framework are prohibited or are restricted in the EU. So what does it all mean? It means that under the new changes, hopefully for Northern Irish citizens, they will always be able to receive parcels from the UK and from the EU without any burden. We've mentioned the storm and break earlier. This is significant as well. It's a mechanism that will give Northern Ireland the power to object any changes to EU rules that would apply to Northern Ireland. Originally, Northern Ireland was to stay aligned with EU law in certain areas, and that includes VAT. However, with that new mechanism, if required under exceptional circumstances, the mechanism can be triggered to object to any European VAT rules applying to Northern Ireland. So I want to wrap up this part with what's happening next. So the next steps when it comes to the Windsor Framework is that the UK and the EU are currently taking forward legislative measures so that the solutions can be translated into law. We know that there will be further details and further guidance to be published. So we've mentioned a few changes. When it comes to the switch from customs checks to collection of commercial data, this is due to come into place towards October 2024. Until then, more guidance, more details are due to be published by the government. So I would say to keep an eye on this. This is not happening tomorrow. Some of these changes we've mentioned are happening sooner. For example, the new scheme for the second-hand vehicles. This is from the 1st of May 2023. But when it comes to the change of customs declaration to collection of ordinary commercial data from invoices, from transport documents, this is not happening tomorrow. It's happening from October 2024. So what do you need to do until then? Keep an eye on the changes, look at the trader schemes, and wait for further guidance, further details to be published. We will be doing this at simplyvat.com, so you can always contact us if you're unsure. And whenever new guidance and new details are published, then be assured that we will make our audience aware. And then the UK systems will have to be updated, and more work is still to be done with the EU. So there's a joint committee with the UK and the EU, and they're currently working on the solutions. Systems will have to be updated to reflect these changes. This is going to be my takeaways for today for everyone. So what I would want you to take away from this webinar is that Northern Ireland essentially is considered as part of the EU for that purposes. Imagine that it somehow has not really left the EU, as a really simplified way to put it. These simplifications and the EU VAT simplifications only apply in Northern Ireland when it comes to goods, not services. The European distance selling rules apply to Northern Ireland, which means that you can benefit from OSS, you can benefit from IOSS, you can sell on a marketplace and maybe have your liability switched from you to the marketplace. You need an XI prefix when trading in Northern Ireland. We've just said that the marketplace can take VAT liability under certain circumstances. So if you're thinking of selling to Northern Ireland, that do make sure that you know who's collecting the VAT, because it may change based on where you're based, based on the value of your goods, etc. Take a look at the Trader Support Service. This is there, it's free to use, and it's there to help traders prepare for the changes and also dealing with the customs procedures under the protocol. So do take a look at this. And lastly, if you're an e-commerce business and you're sending parcels to Northern Irish customers, be aware that further guidance will be published in the next few months with more details on the new simplified procedures and how the collection of commercial data will work. and how to switch to that new process. So this is it for today. I hope this was really helpful. I'm gonna switch over to Alex, and thank you so much for listening, everyone. It's a lot to take on, but yeah.
Thank you so much, Louise. So I'm going to ask a few more roundup questions before we get to the questions that were asked in the comment section. Thank you for popping your questions in there. If there's any more that come through, please, ask them now. So first off, I will be moving goods from GB to Northern Ireland. What is likely to change for me?
So I think for you, the most interesting aspect of the Windsor Framework is that simplification of customs procedures. So rather than currently having to fulfill, to comply with the custom checks, requirements, etc., then you're likely to simply have to communicate your commercial data. So much more simplified, less burden, less red tape, hopefully making your life easier under the changes. So again, keep an eye on further guidance. This is likely to apply from October 2024, so not tomorrow, but expect simplifications to your trade to Northern Ireland.
Thank you. And our final roundup question here. So I've been having issues sending parcels to Northern Irish customers. How are the new arrangements going to help me in practice?
So I would say the same as the previous question, actually. This is typical from the issues that many traders, even customers receiving goods or trying to purchase goods from GB and not being able to receive parcels. I think for you, again, the most interesting aspect of the Windsor Framework is the fact that when the changes come into place, when the new system comes into place, then you're not going to have to comply with the burdensome custom checks, the requirements, etc. And instead, you should only have to communicate and use the commercial data that you currently have anyway. So the sales invoice, the transport information that will be collected and will be used by authorities to monitor the flow of goods. So I think, again, a little bit like the previous question, much more simplified, and hopefully that will make your life easier and the life of your customers easier as well when receiving your parcels.
Perfect, thanks. Moving over to our first question from Nicholson. So the German tax office told me that the 10,000 euro threshold doesn't apply to GB companies shipping from Northern Ireland. Louise, are you able to provide a little bit of light on this?
Yes, absolutely. Yeah, that's right. So if you're a non-EU business, that 10K threshold does not apply. It only applies to, we need to mention it, but it really applies to very few types of traders. So it applies to EU-based traders only shipping their goods from a single member state. There has been a lot of confusion in calculating that threshold since the new rules came into place, and in fact there's a new package of rules that will be introduced in the EU in the next few years from 2025 and 2028. So if you're trading in the EU, do also keep an eye on this. And one of the clarification that will be brought and put black and white is how to calculate that threshold, because many traders have had issues. But yes, I'm not surprised that the German tax authorities told you this. Unfortunately, the interpretation on how to calculate that threshold can differ from one member state to another. This is something that we've seen because it has not been made clear in the explanatory notes from the European Union on what is included in the threshold or not. And that's been causing more confusion. But as a GB business, it should not apply to you because it does not apply to non-EU businesses. But I would say to also wait for the clarification that should be published by the European Union. Actually, more member states, I think it was Austria, which was asking a few months ago to the European Commission services how do we actually calculate this threshold? What's included? Is it goods from a single member state? Is that goods shipped from different member states? Because it's unfortunately not clear. But yes, as a GB business, it does not apply to you. It does not apply to you. Hope that answers your question.
Okay, I know we're running out of time here, so I'm just going to answer a few more questions. If you have to leave, again, you'll get this afterwards, but we might just try to answer a few more in here whilst we're here. So is there a a domestic reverse charge for B2B transactions between a UK business and a Northern Irish business when consignments don't exceed £135 in value?
Yes, so for B2B trade, the reverse charge continues to apply there. Your GB businesses will have to account for this in their VAT return in this case.
Thank you. Next from Ryan, can you advise on the margin scheme sales, not vehicles, moving between GB and Northern Ireland if the company is in a VAT group? Is import VAT due at the standard rate on these transactions?
Can you advise on margin scheme, not vehicles, moving from GB and Northern VAT group is important? I'm not actually sure about that one, but I can come back to you with this one. There's specific rules. Too familiar with this one, but we can come back to you. I can check and come back to you with the rules applicable to this scheme.
Okay, we're just going to move on to a question from Roger here. According to Invest Northern Ireland, the Windsor Framework is not yet guaranteed to go through. Apparently, the orange order / the DUP may have the ability to stop it. Does anyone have any update? And I think, Louise, you do have an update on this.
Yes, you're right. There was a lot of talks before the agreement was actually agreed. So I can't remember which date, but I think it was last week. But it actually it went through. But yes, from what we know, I know that there was a lot of speculations that the DUP would not approve it, but it was actually approved as far as I know since then.
Perfect. Thank you, Louise. That is going to be about all that we can answer today. So if we haven't got back to your question yet, we can reach out to you separately on email. We would have received your email when signing up to the webinar. I just want to say thank you, everyone, especially for your patience through the internet connection issues, but also for tuning in. I know tax isn't the most exciting subject, but we appreciate that it's really important to your business trading cross-border and being able to sell within the EU and the UK. So thank you so much for tuning in, and we hope to hear from you really soon. Thank you.